I think Mr. Pathak has already gave you the flavor of the banking, and especially the risk mitigant or risk management tools which he has given are very, very important. In this discussion, I think a few of you who are Indian MSME and really have your enterprise and you are finding it little difficult to raise the funds, I think they will be benefited from this talk. So, what is MSME? Many of you, all of you know that there are, in the manufacturing sector, the investment in the plant and machinery is the criteria, and in the service sector, the investment in the equipment is the criteria. So, micro, the maximum limit is 25 lakhs in Indian rupee. Small enterprise can go up to 5 crore, medium enterprise up to 10 crore. Similarly, in case of the service enterprise, micro enterprise is 10 lakhs investment limit, small enterprise is 2 crores, and then medium enterprise is 5 crore. But when they calculate this plant and machinery investment, mind it well that some of the investment which is in utilities, amenities are not counted. So you may go a little bit 10 to 20% higher also and you get the registration. So this is how you become eligible for certain schemes, concessions to be categorized as the MSME. Now as far as the funding for MSME, there are conventional methods. Project financing for a grassroots new project. You have the business idea, prepare a project report, have the total cost of the project, land, building, plant, machinery, contingencies, pre-operative expenses, working capital margin, and this is your cost of project. And what are the means? Is your own capital, or for the existing unit, the cash generation, and the term loan from the banks. I think most of you are familiar of this, but yes, we specialize in that. We have set up more than 300, 350 SSI and MSME units and have arranged finance over the 25 years period of time or 30 years from various banks, institutions for them. So one is the term loan. When you set up a project or you are doing expansion, putting the money into the fixed assets, it's a term loan with some moratorium and repayment over a period of 3 years, 5 years, 7 years, depending upon the project, the gestation period. But the major component otherwise for running your day-to-day business is the working capital. So how do you calculate working capital? Your working capital assets, the period of holding, which should be the reasonable level as per the industry norms, your stocking period for raw material, goods in process, finished goods, your receivables, maybe your month's expenses, which you want to cover up in the working capital, less the credit which you get on your purchases, and you arrive at the working capital requirement. Take out your margin of maybe 25 to 30%, depending upon the asset, and this is how you calculate your working capital limits, which is available from these banks generally. The working capital limits again can be of two types, fund-based and non-fund-based. Fund-based for your stocks, your receivables, and non-fund-based to letter of credits which are issued to your suppliers for giving you the material, or the letter of guarantees for your performance guarantee and guarantee of bank guarantee for various purposes, which is very valuable. So this is how is the conventional way of looking at the things. There are certain schemes of the government for the small enterprises. It is covered under MSMED Act. Credit guarantee of MSE loans up to 1 crore without the requirement of any collateral or third-party guarantee. But of course, in practice, many of the banks are not following it, except a few public sector banks, because everybody wants to be covered, irrespective of whether it is government scheme or not. Both manufacturing and service tax sectors are eligible under the scheme, but credit for retail, trade, educational, training institutions, self-help groups is not covered under the scheme. However, you have to pay certain guarantee commission, maybe ranging between 1% and 1.5%. So your cost goes little higher. There is another scheme of Stand Up India. Here, especially I know about public sector because I have been dealing for 40 years with the public sector banks, and 95% of my clients are dealing with the public sector banks, which I have serviced to them. So there, every branch has been asked to have one proposal under Stand Up India. 10 lakhs to 1 crore is the loan given, in which at least either one SC, scheduled caste, scheduled tribe, or women entrepreneur should be there. And in case of a private limited or a limited company, 51% of the shareholding should be held by SC, ST or women entrepreneur. It's a composite loan, term loan plus working capital, to be up to the 75% of the cost of the project. So here again you have to put in 25%. The rate of interest is very high. It is marginal rate plus 3%. So probably you are looking at 12 and a half. And then over and above 1%, 1.5% of that, those kind of schemes, guarantee commissions and other things. Now, the Bombay Stock Exchange SME platform is known as BSE SME, and National Stock Exchange is known as Emerge, the stock exchange name, but it is on NSE and BSE. So, what are the eligibility criteria? Let's look at it. The post-issue capital should not be more than 25 crore. And how this idea came in, the SEBI about 3.5 years back accepted this idea, yes, even the small issue also should come, even the smaller people also should be able to raise capital from the masses. So SEBI approved this idea with a rider that only the informed investor should invest and not a very, very small investor. So they came in with a lot size that only those who can apply for minimum 1 lakh to 2 lakh rupees at the time of when the IPO comes, they can only apply as one lot. One lot will be determined depending upon the issue price, and the lot value at issue price should not be more than 2 lakhs and should not be less than 1 lakh. So, suppose your issue price is say 15 rupees. So, your lot will be of 8,000 shares. That will be 1.5 lakh rupees. But it is 25 rupees, then the lot can be 4, of 1 lakh. So, only 4,000 shares. As it goes along, if it crosses the value, then the lot size changes. But that 6,000, 10,000, 20,000 people, 30,000 people, they cannot apply on this. And SEBI also relaxed certain conditions that these companies, being smaller companies, they should not come to us for approval. Only the stock exchange can give the approval. Less time, less hassles, less compliances. So, the eligibility criteria is 25 crore. The company, it should be a private limited, converted or a direct list limited company under the Companies Act. The post-issue capital of this company after this IPO should be minimum 3 crore. The net worth of the company after the, should be at the time of the issue should be 3 crore minimum in Indian rupee. I am talking all about Indian rupee. And the net tangible asset should be at least 3 crore as per the latest audited financial results. Then the company should have a good track record. Out of last 3 years, at least 2 years it should have had a distributable profits as calculated under section 123 of Companies Act 2013. But if you don't comply with the 3 years of existence and 3 years of profitability, then your net worth should be 5 crore instead of 3 crore. So you are still eligible. There are certain other conditions. The company should have its own website. Its shares which are held by the promoter should be in demat form, dematerialized. Every one of you must be knowing about it. There should not have been a change in the promoters in last 1 year. It should not be a BIFR registered company, but those companies which have come out of BIFR after fulfilling net worth criteria and everything are eligible. And no winding up petition should have been admitted by the court against this company and the court receiver is set up. Then it can do it. One very beautiful point in this is that a SME may not remain SME after 2 years, 3 years, 5 years. I mean, you want to grow and you want to go on the main board of the exchange. So it says it's very simple. After 2 years of continuous listing, if you fulfill all the criteria of the main board of the exchange, just by passing a special resolution of your shareholders, you can apply for the migration to the main board. So today, with a very small amount, you can bring an SME issue, almost about maybe 1/10 of the actual issue price, you can bring in the issue today, or more, lesser. And in 2 years, if your profits, turnovers, your market cap, all those criteria are fulfilled, you can immediately migrate to main board. Now, how to plan? We have some time. How to plan? The company has to seek the permission of its board. Yes, we are ready. We can raise capital from the market by way of listing our shares on the market. Appoint a merchant banker, SEBI registered merchant banker, like my company, Ajcon Global, we are SEBI registered merchant banker, like that there are several merchant bankers. You appoint them. With their help, prepare a red herring prospectus, DRHP, if you are going for price discovery mechanism, or just a draft prospectus if you are going for a fixed price issue. Then appoint registrar and transfer agents. These are all intermediaries to the public issue. Appoint your legal advisor who will vet this prospectus from the legal point of view. All those litigations and various information which are required to be filled in this prospectus, along with your 5 years of account statement, your auditor certificates, your history, your business, your promoters. So they will do the legal due diligence and then seek shareholders' approval for this issue. Appoint an advertising agency for marketing your issue, and you are ready. Preparation of prospectus, then you are filing it to the stock exchange. The stock exchange is waiting your prospectus. They may even come to inspect your office, your places of work, to know the genuineness of it. They will approve it. You file the prospectus in draft prospectus with ROC. It becomes a prospectus, and then open the issue. Seek the listing and trading permission from the stock exchange. Now, some important feature of SME issues in order to protect the investors and the promoters. SEBI in the regulation has put in a condition that the small issues should be 100% underwritten. Out of that, minimum 15% should be underwritten by the same merchant banker, the lead manager of the issue. This is a very important provision. Means it is all coming on the shoulder of merchant banker, the entire risk of the issue. Another good thing for the investor is 3 years of compulsory market making, but within the 10% band. So the market maker for 3 years has to give a two-way quote. So say issue price is 100 rupees. So he will give the buy quote at 91 rupees, sell quote at 100 rupees. But he has to give the quote, two-way quote. That is market maker. He may narrow it down, but not enlarge. It cannot be like 20% lower he is a buyer and 20% higher he is a seller. No. Within that price band which is permitted, he has to give his quote. To create liquidity in the market for anyone who wants to exit, can exit. Anyone who wants to buy, can buy. As I told you, the minimum lot size is between 1 lakh and 2 lakh depending upon the issue price. The lot sizes are decided in the round amount. 1,000, 4,000, 8,000, 12,000, 10,000, 12,000, like that. Now, what is the total cycle of managing this issue? Many of them say issue means a lot of formalities, a lot of time and this thing. Here the time is almost fixed. Rather, you can reduce the time. So, on day one, you have a board clearance, appoint a merchant banker. Immediately on the same day, the merchant banker will give you the checklist. Appointment registrar and transfer agent with the help of the merchant banker, just within 15 days. Broad-base the board, because you should have an independent board. 50% if the chairman is interested, 50% of the directors should be independent directors. And if the chairman is a non-executive chairman, then 1/3 of the director should be independent director. Appoint a company secretary. This can run simultaneously. Then complete the due diligence. You take the membership of CDSL, NSDL, compulsorily both. Demat the promoter shares in between. Complete that process ready. This all can be done within 30 days. Preparing the prospectus and submitting with the exchange. Within 40 days you can do that. Approval of the prospectus and finally approval from the exchange. 70. So T plus 70. And then you can open the issue anytime. Complete the post-issue formalities. So within 3 months your shares are listed and start trading on the exchange. You can reduce about 10 to 12 days if you are very prompt in this. And it's very clear, laid down process, no ambiguity. So this is how you can bring in. You can also see this whole process in 2 videos of mine which are on YouTube. I got about 35, 40 videos on YouTube in the name of Project Share the Wisdom, which are on economy, finance, capital market, personal development. But these 2 specific are connected with the SME issue and the listing process. I think I should thank you all for a very patient hearing, and we can have some questions if it is there. Yes, please.
Good afternoon, sir. Yeah, I wanted to know, is it better to go through the private equity route, wherein you first take a private equity strategic investor from a metal background, who will also sort of mentor you and take you to the next step, and then go for a main issue, or for an SME, say, for the mention?
Okay, your question is clear to me. It's a very good question. Yeah. See, private equity has, like that way, every fundraising source has its own good and bad points. I mean, for a promoter. In private equity, you are taking the money from only one person.
Yes.
One party, 2 parties, one this thing. So they are in a very, very dominant situation because they sign an internal agreement with you.
Yes.
Of certain do's and don'ts. They fully tie you up. Like this you cannot do without our permission. You cannot enlarge your board without our permission. You cannot deviate your business without our permission. This, that, so many things.
Right.
But at the same time, you are getting a huge chunk of money immediately from somebody, which idea you may not sell to public. But if you feel your business is good, reasonably good, it has some kind of special technology, some kind of USP which you can sell. It has a scalability. You can sell the idea to the people, the masses, the merchant bankers. The best way is to go to public straight. Because there you are answerable to 1,000, 2,000, 5,000 people only at the time of the AGM. That is also hardly 1 or 2% people they attend your AGM. Of course, you have to have the fully corporate governed, you have to follow the rules of the exchange, you have to file the papers, you have to get every 3 months your result declared, all those things. Now that will be, you may treat it as a negative, yeah, but I'll take it, it will make you more disciplined. Okay. So it all depends case to case.
So you mean to say the compliance effort is worth the flexibility and the
yes,
vision?
That of course.
The compliance effort is
if you come to me, we can even advise you on that also, that okay, which is the best way for you to go today.
And when an entrepreneur is wanting to go for an IPO in the SME segment, what should be the, how many years should he have a vision for the company? Is there, because, from the compliance objective, 10 years, 15-year, 20-year vision is essential, or a 5 to 7 year plan is also enough?
No, vision can be even for next 3 years.
Okay.
See, mission and vision are different. Mission is permanent. You want to be number 1 or this, whatever it is. Vision, you can have 3 years, 5 years, because you are not allowed to give any projections in the document. You cannot talk anything about your projections numbers.
Okay.
You can talk about your idea, your vision, but not in numbers. So, no problem. I mean, you have a history of even 3 years, out of that 2 years profit, you can go just with 3 crore condition and do it. If you don't have that, it's only 2-year-old company or 1-year-old or this thing, but then in that case you have the 5 crore of capital, net worth and tangible in 3 crores.
And
do
usually
it.
the valuations come on the projections.
Can we take this question? Yeah, please. We've got some more.
Absolutely.
Yeah.
We'll
Thank you
take
so
the
much.
questions offline, sir.
Offline,
We'll
okay.
take some more questions offline. Thank you.
Sure. Thank you very much for having invited me here. I am incidentally the part of, I know him for last 15 years, so Sunil Madia, and he has done an excellent job. We have been advising from the financial and commercial angle on this project. And we have been retained for approaching a few investors also for this. So anybody is interested can contact us. Thank you.